And in our top business story, Abu Dhabi's GDP has grown to 198.8 billion dirhams in this second quarter this year, recording a growth of 2.3% compared to the same period last year. That's according to the latest report by Abu Dhabi Department of Economic Development. The report revealed that in the second quarter of this year, Abu Dhabi witnessed a relatively strong contribution of non-oil activities in its GDP, which increased to 51.5% compared to roughly 50.9% in the same quarter last year. It was also revealed that non-oil sectors enhanced economic growth in the quarter, as non-oil GDP growth rate at fixed prices reached 3.6% in the quarter. The latest data issued by the Abu Dhabi Tourism and Culture Authority showed the number of guests rose by 3.31% in the second quarter compared to the same period last year, while in the real estate sector, the report showed that the rental index value of housing units in the capital was 102.1 percentage points in June this year. That's compared to around 108.5 in the same month last year, falling by 5.85%. The Studies Directorate of Abu Dhabi Department of Economic Development was quoted saying that stable performances of some key sectors reflect higher optimism and confidence among consumers and the business community within the Emirates' economic conditions. According to the Abu Dhabi Economic Performance Report for Q2 this year, the improved performance this quarter followed a moderate economic growth in its first quarter, while it is expected that Abu Dhabi and the UAE will continue their efforts to contain the economic impact of continuous fluctuations in the oil markets. His Excellency Sultan bin Saeed Al Mansouri, the UAE's Minister of Economy, has stated that a cabinet resolution on the issuance of the executive regulations of small and medium-sized enterprises reflects the high interest of the country's leadership in this vital sector. According to local reports, the resolution is a major boost to national efforts, providing Emirati SME owners with full support to ensure their success and sustain national entrepreneurship in all vital local economic sectors. This important step complements legal measures and institutional systems supporting the growth of the sector, which is recognised as among the government's top priorities in line with the UAE Vision 2021. The law cites a wide range of incentives designed to build a favourable and advantageous work environment for them. The regulations also aim to promote key incentives available to innovation-based enterprises and companies with dedicated research and development departments. Both are given priority in terms of access to facilities and other benefits provided by the law. The regulations also prioritise local investors and patent owners who can apply for financial support to complete their research and development work. Early this year, Al Mansouri said that the country is giving high priority to SME sector across policies and initiatives with an aim to boost the share of the segment in the national economy to 70% from 60% by 2021. Currently, the SMEs account for 86% of the total workforce in the country. Growth in the UAE's banking sector will remain flat in 2017, in line with falling profits towards the end of 2016. That's according to His Excellency Abdulaziz Al Ghurair, who is the chairman of the UAE Banks Federation. At a press conference, Al Ghurair stated that profit levels at banks across the UAE will witness a fall between 10 to 20%, largely due to loan impairments, a fall in government deposits and lower third quarter earnings. The thoughts from His Excellency comes days after EFG Hermes, the Egyptian investment bank, estimated that the profit of 9 UAE banks that it tracks will on aggregate fall by 6% year on year as revenues slow and more money is set aside to cover bad debt. Dubai-based peer Mashrek also reported a 25% year-on-year plunge in profit in the quarter as impairments for bad loans rose 82%. Last week, Emirates NBD, the UAE's biggest bank by assets, said that its third quarter profit slipped as money set aside for bad debt at its Islamic banking unit increased. Commenting on the 2017 outlook and the newly passed UAE bankruptcy law, His Excellency Al Ghurair stated that banks have been helping small and medium-sized enterprises to restructure about 7 billion dirhams of debt owed by more than 1,700 companies this year.
during this year, our growth in GDP was 3.5%. Maybe next year it's going to be 3, maybe 2.5%. So a slight slowdown in the economy next year. So the performance of the bank is a reflection of the growth of the GDP, or the performance of the GDP. So I expect there will be some slowdown in the performance of the bank. Now, because we have made all the provision, hopefully during 2016, maybe we'll be flat next year on the profit growth level. UAE is unique in the world because most of our SME customers are expat, and the moment they get in trouble, they skip. They get on the plane and run away. So that has really hit the banks by surprise, that people who has done business here for the last 10 years, and when the squeeze comes, they just leave the business and run. UAE Bank Federation worked together with all the bankers and to put a protocol of trying to put a rescue plan for genuine SME customer where they can get together and work on rescheduling their loans. We have managed on the last 7 months now to help 1,700 customers with total loans of 4.5 billion dirham to do a workout solution for them so they don't run away, we don't take them to courts, and then it's a win-win situation, win for the economy, win for the customer and the banking system.
His Excellency Al Ghurair stated that the UAE will soon be adapting the IRFS 9 measurement, which will risk rate each loan offered. Described as a move that will reduce easy access to funds, the new mechanism is expected to protect banking provisions while also allowing banks to be more selective when offering loans.
I think UAE banking system is ready and equipped to adopt any international world-class regulation. And of course, this is going to, we used to make provision looking backwards. Now the provision and impairment on loans will be looking forward. There is a complex formula of how you come up with the looking forward provision, but banks are ready and they will start implementing these practice, and when the central bank push the button, we'll be ready for that. The big difference is the moment you book a loan, depending on the risk rating of the loan, you will have to make a provision immediately. That immediate provision will hit your P&L right away. So it will change the way we do business. It will change the way we price our customer.
The Dubai Gold and Commodities Exchange has announced that it has received a license from the Shanghai Gold Exchange to list Shanghai Gold futures on its exchange. It will be the first yuan-denominated gold future product to be offered outside of China, and it will use the Shanghai Gold benchmark price as its pricing mechanism. According to news agency WAM, the aim of the listing is to create further economic development and cooperation between the two countries through the precious metals trade. The gold futures product will offer global participants access to China, and with that, a deeper pool of liquidity, as well as an enhanced gold pricing mechanism. Currently, the DGCX bullion products offering includes spot and futures gold contracts, as well as an Indian gold quanto futures. The DGCX and the SGE signed a licensing agreement at a ceremony held at Dubai Week over in China, Shanghai, in the presence of Abdullah Al-Sali, the Undersecretary of the UAE Ministry of Economy for Foreign Trade and Industry Affairs, Zhao Jinpu, the chairman of the Shanghai Gold Exchange, Gautam Shashital, the Chief Executive Officer of the DMCC, and Gaurang Desai, the CEO of the DGCX.